Hello and welcome to India Business Hour. I'm Ashmit Kumar and here are the headlines that we're tracking this evening. Reliance Industries delivers a strong third quarter performance. Consolidated net profit jumps 7% year on year, as do revenues. Retail business is on a firm footing. Jio delivers robust growth as average revenues per user cross 200 rupees. The company expects the additional impact of tariff hike to reflect in its telecom business over the next few months. Infosys beats expectations in the third quarter with a revenue growth of just under 2%, hikes full-year revenue growth guidance to an upper band of 5%. Axis Bank reports a weak Q3. Business momentum is at a 15-quarter low. Asset quality worsens. Net interest income is below the street's estimates. Israel's cabinet delays voting on a Gaza ceasefire deal even as celebrations erupt across the region and the world. Netanyahu accuses Hamas of trying to obtain last-minute concessions. Gaza authorities say at least 40 people have been killed in Israeli strikes since the ceasefire announcement. A little over 2 weeks left for the union budget. Sources tell CNBC TV 18 that the government is considering reintroducing the concessional corporate tax scheme for new manufacturing units. May set the concessional rate at 18% instead of 15%, which was the rate in the previous edition of this scheme. The government decides to set up the 8th Pay Commission. Recommendations on salary structure and pension payments for central government employees will be implemented in 2026. The term of the 7th Pay Commission expires at the end of 2025. SpiceJet Chairman Ajay Singh appears before the Delhi High Court after receiving summons over non-payment to lessors. High Court comes down heavily on SpiceJet for repeated non-compliance, says airline has done a disservice to the court and taken it for a ride. SpiceJet agrees to pay lessors $6 million with riders. Reserve Bank of India says Tata Sons' application to deregister itself as a non-banking finance company is still under examination. Indicates that the company still has a chance to avoid complying with the RBI's mandate for large NBFCs to list by September 2025.
Today, an oligarchy is taking shape in America of extreme wealth, power, and influence that literally threatens our entire democracy.
Outgoing U.S. President Joe Biden strikes an ominous tone in his farewell address, warns that an oligarchy is taking shape in America, raises the red flag on tech industrial complex that could pose real dangers.
I don't think there's anything that could stand in the way of U.S.-India progress. A relationship is defined not by whether you love each other. It's clear U.S. and India love each other.
Outgoing U.S. Ambassador to India Eric Garcetti says that nothing can stop the progress in bilateral ties, wants more American companies to move out of China and invest in India, welcomes the government panel report recommending legal action in the alleged plot to kill 6 separatist Panu in New York. Hindenburg, the U.S. short seller behind the $140 billion rout in Adani Group stocks, is shutting shop. Founder Nate Anderson says, "We shook some empires that needed shaking." Nearly 100 individuals, including billionaires and oligarchs, were charged based on Hindenburg reports. Actor Saif Ali Khan undergoes surgery after reportedly being stabbed by an intruder at his Mumbai residence early this morning. Doctors say he's out of danger. Police releases CCTV visuals of the alleged attacker, says teams have been formed to nab him. Well, let's begin with a look at the day's trading action. Now, the Lal Street ended in the green for the third straight session. Nifty and the Sensex gained nearly 0.5% each. Nifty, meanwhile, managed to hold on to the 23,300 mark. The broader markets' outperformance continued, with Nifty Bank and the mid-cap index soaring over 1% each. And well, in the money market, the Indian rupee weakened against the dollar once again. The move comes despite the RBI announcement, a daily liquidity infusion through bond auctions after a 5-year gap. The central bank will decide the auction amount based on daily assessment of liquidity. The country's banking system had a liquidity deficit of over 2 trillion rupees as of Tuesday. This move, along with the slowing inflation in the United States, has bolstered hopes for a rate cut in the month of February. Well, the big earning action of the day. The Reliance Industries results were out. They met Street's expectations in the third quarter, driven by strong growth momentum in the oil to chemicals and retail businesses. Consolidated net profit jumped 7% year on year. Reliance Jio average revenue per user, ARPU, crossed the 200 rupee mark for the first time. Reema Tendulkar is joining us now with more details, and so is my colleague Manglam Malu to give us an analysis to help us decode these numbers. Reema, coming to you first, help us decode these numbers, decipher these numbers.
Well, Reliance Industries has reported a beat in Q3. The company's top line has gone up by 6.6%, margins have expanded 20 basis points to 18.3%, and profits are up 7.4% on a year-on-year basis. Now, the numbers are a beat compared to Street expectations. Look at it on a quarter-on-quarter basis. We were working with an EBITDA improvement of about 8%. The company has delivered an EBITDA expansion of 12%. And now the beat, as you rightly said, has come in on account of two key segments. One is the oil to chemicals business and the other one is retail. So for the oil to chemicals business, the EBITDA has gone up sequentially by 16%. We were expecting about a 10% growth. Even retail, where the expectation was about 7 to 8%, the company has come out with a 16-17% EBITDA expansion on a sequential basis. Oil and gas on expected lines was muted. Sequentially, there is an uptick, but on a year-on-year basis, the EBITDA is under pressure, and Jio has had a steady quarter. Now, the reason for the strength in the oil to chemicals business is strong domestic demand, higher volumes and operational flexibility, while the oil and gas business, which is basically upstream, the EBITDA has declined on account of lower KG D6 volumes. For the telecom business in particular, it was a steady quarter, a 3.4% sequential growth in top line on a year-on-year basis, about a 15.5% revenue growth. And this is the second consecutive quarter of about a 15% revenue growth on a year-on-year basis. The driver of this is still the July tariff hike, and the full pass-through of that is still taking place. Margins are steady at 52.8%. The positive in the numbers are the subscribers. If you remember in the prior quarter, subscribers declined by 10.9 million in Q2 on account of the tariff increase. But this time they've managed to expand their subscriber base by 3.3 million sequentially. And on a year-on-year basis, it's up close to about 11 million. And ARPUs have now crossed the 200 rupee mark for the first time ever, expanding to 203.3. And the company says that perhaps we could see ARPU expansion going ahead. The words are the residual impact of tariff hike to flow through over the next few months, which means ARPUs are likely to inch up further from here. And 5G now accounts for 50% of the company's wireless traffic. So in a nutshell, it's a good quarter from Reliance Industries. The stock did well on Thursday. It was up 1.1% so far this year. It's outperformed the markets by nearly 6% with that 4% rally that we've had since the beginning of the year. But it's still 20% off from its 52-week highs of more than 1,600. So is there more to go? But let's find out about Reliance, because that was the key surprise, a positive surprise this time.
Well, for Reliance Retail, we had a revenue growth of 8.8% year on year. Most on the street were expecting flat performance. Quarter on quarter, it has grown 18%, of course, led by the festive push. And the operational performance as well has surprised the street positively. We have 9.4% growth year on year at 6,840 crores in terms of an EBITDA, 7.6% margins. Most on the street were working with a number between 6,300 and 6,400 odd crores, and that's been the big beat out there. The last 3 quarters in Reliance Retail's revenues have been close to around 76,000 odd crores in terms of revenues. This time around, it's jumped all the way up to 90,000 crores. So record number coming in for Reliance Retail on both revenue as well as the EBITDA front. If you look at key internals, some of the footfalls of the company that have grown 5% year on year at nearly 296 million. If you look at other internals like the number of stores that they've added, grocery retail growing at 37%, and some of their own brands as well. Campa having 10% market share in some of the key states in the sparkling drinks market. At the same time, Campa and Independence, their FMCG verticals, looking to cross 1,000 crores in FY25 revenue, along with digital and new commerce business doing extremely well. 18% is the contribution to digital and new commerce business to their overall retail revenue, amounting to nearly $2 billion in terms of quarterly performance. Retail definitely has led Reliance's quarterly earnings this time around, and this is also the valuation driver for the company. So this sustaining would do a lot better for the stock on the whole.
Right, Manglam, Reema, thanks a lot for that. But Reema, do stay on for a bit. From Reliance to Infosys, which has beaten the expectations in Q3 with a revenue growth of just under 2%. Quarterly profit rose 11.4% compared to the last year. The IT major also raised its revenue growth guidance for the full year to 4.5% to 5%. Reema Tendulkar is back with us for the Infosys report card. Reema.
So it was a good quarter for Infosys. Revenues beat street expectation. Revenue growth at 1.7% was ahead of the consensus expectation of 1%, ahead of its closest peer TCS, which had a flat quarter, this time on account of furloughs. The margin performance was in line with expectation. Infosys margins inched up 20 basis points to 21.3%, but the wage hike impact kicks in only in Q4 and Q1 of FY26. On expected lines, the companies also raised the full-year revenue forecast. Currently, it's at 3.75 to 4.5%, and this was raised to 4.5 to 5%. Again, in line with street expectations, margin guidance unchanged at 20 to 22%. Deal win steady at $2.5 billion. Attrition is inched up, and the company has hired more than 5,500 employees, hiring picking up for the second consecutive quarter. But the key positive takeaway in the management commentary was that they said that in Q2, discretionary demand picked up in US BFSI. But in Q3, the change that they saw was a recovery in discretionary demand, even in Europe, BFSI in Europe, and retail and consumer sectors in US. So these were the two pockets where we saw an incremental pickup recovery in demand, and that was a positive. So on the whole, it was a good quarter by Infosys this time.
What we saw was, the last quarter we had seen discretionary becoming good in financial services in the US. Now, this quarter, we have seen financial services in Europe, also the discretionary showing signs of improving, and on retail and consumer products in the US is showing that signs of improving. Now, the second, I think, was about if that is the guidance, what is the Q4 and so on. So there, first, as we've always shared, our Q1, Q2 in a typical financial year are strong. Our Q3, Q4 are typically weak. So that's the sort of seasonality that we see.
Well, staying with action from the earnings space, Axis Bank reported a weak third quarter with business momentum at a 15-quarter low. Abhishek Kothari is joining us now with a quick wrap of all the numbers. Abhishek.
Well, to begin with Axis Bank, the business momentum is the weakest that you are seeing in last 15 quarters. Deposit growth is the lowest in last 15 quarters, coming in at 9% YOY, and advances growth is much weaker than deposit growth at about 8.8% YOY. The other income is down about 11% on a sequential basis. Operating efficiency is one of the best in last 7 quarters, with cost to income ratio being at 46.2 versus 47% sequentially. Now, this is because the overall OPEX is down about 4.7% quarter-on-quarter and grown by just 1% YOY. Operating profits are down by 1.7% sequentially. It's the lower provisions which has aided the PAT this time around. Gross NPA is up only 2.5% in absolute value on sequential basis. Net NPA is up 4.5% quarter-on-quarter. So gross NPA ratio has inched up by just 2 basis points sequentially, and net NPA by just 1 basis point sequentially. The NI is weaker than our poll. The PAT is ahead of our poll due to lower OPEX. Back to you.
Right, Abhishek, thanks a lot for that. Now, Tata Sons continues to remain classified as an upper-layer NBFC as per the RBI. As per its latest list, the company is among the 14 other companies who have been classified as an upper-layer NBFC. As per an RBI directive dating back to October of 2021, large non-banking finance companies were asked to list their shares on a stock exchange within 3 years. Reserve Bank of India has said that Tata Sons' application to deregister itself as a non-banking finance company is still under examination. To the aviation space now, SpiceJet chairman and MD Ajay Singh appeared before the Delhi High Court over non-payment of $6 million to a lessor. The Delhi High Court came down heavily on SpiceJet for repeated non-compliance with its orders. It said that the airline was making a fool of the court and it cannot permit corporate anarchy. In response to the court's reprimand, SpiceJet agreed to pay $6 million under protest. It will pay $2.6 million within a week to Team France and will deposit the balance with the court in 3 weeks' time. Now, the government has paved the way to set up the 8th Pay Commission and implement its recommendations in 2026. The commission will decide on the salary structure and pension payments for central government employees. A pay commission is set up once in a decade. The 7th Pay Commission was established in 2016 and its term expires at the end of 2025. The 7th Pay Commission had recommended a salary hike of 14% for central government staff. Well, less than 2 weeks to go for the union budget, government is considering reintroducing the concessional corporate tax scheme for new manufacturing units. Sources tell CNBC TV18 that the government may set up the concessional rate at 18% instead of 15% like last time. Timsy Jaipuria is joining us now with more details. Timsy.
Well, that's right. What sources are indicating to CNBC TV18 that the government is considering a reintroduction of the concessional corporate tax rate. Government currently is mulling reintroduction of the concessional scheme for new manufacturing units, but in a slightly different avatar when it comes to rates at 18%. As against 15% earlier. Government is considering to bring back this concessional corporate tax scheme to promote Make in India, to create employment and, yes, to enhance manufacturing capacity within the country. The view at the North Block, what sources indicated, is that India Inc. has been asking for a reintroduction of this particular scheme to promote Make in India for quite some time. And when we talk about the current status of this proposal, well, the proposal is currently under active discussions between North Block and the PMO, and no decision has been taken as yet because sources indicated that any decision pertaining to the taxation policy is taken only closer to the budget, that is just 3 to 4 days before the budget. Just to remind our viewers what this concessional corporate tax regime was, well, the concessional corporate tax rates were notified in September 2019 with a sunset to end in March 2023, but the scheme was extended by 1 year till March 2024 of 15% plus cess and surcharges for new manufacturing units because of the delays that were induced due to the pandemic. And post that, since March 2024, the scheme, which has had a sunset, India Inc. has been sending requests to the government to reintroduce this particular scheme again for the new manufacturing units. Meanwhile, email queries sent to the Finance Ministry remained unanswered on this particular proposal. So we'll have to wait and watch and see what finally Finance Minister Nirmala Sitharaman announces on the 1st of February. Back to you.
Right, Timsy, thanks so much for that. With that, it's time now for slipping into a very short break, but coming up on the other side, Hindenburg, the US short seller behind the $140 billion rout in Adani stocks, is shutting shop. That and much more on the other side.
Today, an oligarchy is taking shape in America of extreme wealth, power, and influence that literally threatens our entire democracy.
Welcome back. Here's some global news now. Israel's cabinet has delayed the vote to ratify the ceasefire and hostage release deal with Hamas. Prime Minister Benjamin Netanyahu's office has accused Hamas of attempting to obtain last-minute concessions on some aspects of the deal. Hamas has said that it was committed to the ceasefire agreement, which was announced by the mediators. Celebrations erupted in Khan Yunis and other parts of Gaza after mediators Qatar and the United States said that Israel and Hamas agreed to a Gaza ceasefire and hostage release deal following 15 months of war. At least 80 people have been killed in Gaza in Israeli airstrikes since the ceasefire deal was announced. Meanwhile, outgoing US President Joe Biden struck an ominous tone in his farewell address, warning that an oligarchy is taking shape in America. Without mentioning his successor, Biden highlighted a dangerous concentration of power in the hands of a few ultra-wealthy people. Biden also raised the red flag on a tech industrial complex, adding that it could pose real danger to the country.
We see the same dangers of the concentration of technology, power, and wealth. You know, his farewell address, President Eisenhower spoke of the dangers of the military-industrial complex. He warned us then about, and I quote, the potential for the disastrous rise of misplaced power, end of quote. 6 decades later, I'm equally concerned about the potential rise of a tech industrial complex that could pose real dangers for our country as well. Today, an oligarchy is taking shape in America of extreme wealth, power, and influence that literally threatens our entire democracy, our basic rights and freedoms, and a fair shot for everyone to get ahead. We see the consequences all across America, and we've seen it before. More than a century ago, but the American people stood up to the robber barons back then and busted the trusts.
Well, now, outgoing U.S. Ambassador to India, Eric Garcetti, has said that nothing can stop the progress in bilateral ties. Speaking to CNBC TV 18, Garcetti said that he wants more American companies to move out of China and invest in India. He also welcomed the government panel report recommending legal action in the alleged plot to kill 6 separatist Panu in New York.
The Adani case in the US, how is this likely to play out? And is this going to be a problem with India-US relations as well?
I don't think there's anything that could stand in the way of US-India progress. You know, a relationship is defined not by whether you love each other. It's clear US and India love each other. But like in a marriage, can you get past your first fight? Or do you know how to disagree and get through it? And I think we're showing that in the Panun case. It was welcome first step yesterday to see the report come out of the Ministry of Home Affairs, which talked about systemic reform and accountability, which we've been clear. Those two things, which never should happen again, are the 3 conditions for moving forward. There's still a while to go, but it is a very welcome first step. I can't speak to the other case because that's something that I haven't been read into. But look, we are going to need Indian partners, companies that can work with America, that we can help finance in places, whether it's in South Asia, whether it's in Africa or Southeast Asia. We need things that are not debt traps. We need companies that are not state-owned, non-democratic players. And so I look forward to continuing to deepen that work with all Indian companies in the future.
Well, Hindenburg, the U.S. short seller behind the $140 billion rout in Adani Group stocks, has announced that it is shutting shop. Hindenburg had accused the Adani Group of violating corporate governance norms and manipulating its stock prices. Following the allegations, the market capitalization of the Adani Group stocks tumbled from an all-time high of 23 lakh crore rupees in September of 2022 to a low of 7 lakh crore rupees in February of 2023. Now, nearly 2 years since the first Hindenburg report, the group has not fully recovered its losses, and its current market cap stands at 13 lakh crore rupees. Today, the shares of group companies, including the likes of Adani Enterprises, Adani Green Energy, and Adani Total Gas, surged in trade. Now, Hindenburg Research's founder, Nate Anderson, said that his firm shook some empires that needed shaking. He added that nearly 100 individuals, including billionaires and oligarchs, were charged either civilly or criminally by regulators based on Hindenburg reports. Last year, the U.S. short seller also accused SEBI chief Madhavi Puri Book of having a conflict of interest in the Adani matter due to her previous investments in the group. Both Adani Group and Book have refuted these charges made by Hindenburg. Claims 80% of the companies targeted by Hindenburg are still in the red. Yusuf, in fact, is joining us now with more on Hindenburg hits and misses.
Well, Hindenburg found space in Indian media after the short seller came out with targeted report on Adani Group in early 2023, accusing manipulation in group stocks. The widespread sell-off took the group's market capitalization to as low as 7 lakh crore rupees in February 2023. Since October 2017, the short seller has published a report on 63 companies. While stocks of most of these companies got sold off after the report, there are some outliers too. Let me first look at losers. Of the total 63 companies, 9 companies have lost nearly 100%, whereas 35 companies lost at least 50% of their value. The market valuation of companies like Chicken Soup for the Soul, Predictive Technology, Smile Direct Club, Sorrento and Tingo Group have been almost wiped out in its entirety post the research report. However, there are some 12 gainers as well. Among gainers, US-based Bloom Energy tops the list with a gain of nearly 600%. Even diagnostic company Natera, healthcare service provider Davita, software firm Opera, and Adani Power rallied anywhere between 2 to 4 times. Notably, 3 companies, software firm Epix, electric vehicle maker Lordstown Motors, and Sorrento Pharmaceutical, have filed for bankruptcy. Interestingly, about 80% of the companies targeted by Hindenburg are still trading below the price it was quoting before the report.
Now, actor Saif Ali Khan underwent multiple surgeries at a Mumbai hospital after reportedly being stabbed by an intruder at his residence in the wee hours of the morning. The actor sustained several stab wounds. Doctors have said that he's out of danger now. As per the police, the attacker is allegedly related to one of the staff members at Khan's Bandra residence. Saif's team attributed the incident to a case of attempted burglary. The police has filed an FIR and released a CCTV footage of the alleged attacker. They said that teams have been formed to nab him.
Accused फायर एस्केप का यूज़ करके इनके घर पे गया था, ये भी पता चला है। अभी तक के इन्वेस्टिगेशन में ये एक चोरी का अटेम्प्ट था, ऐसा हमारे इन्वेस्टिगेशन में निष्पन्न हुआ है। एक्यूज़ को जल्दी अरेस्ट करने की कोशिश हमारी चल रही है और एक बार एक्यूज़ अरेस्ट हो जाता है तो उसके बाद आगे के डिटेल्स ये हम आपसे डिस्क्लोज कर पाएंगे।
Well, with that, it's a wrap on this edition of India Business Hour. Thank you so much for watching. For more news and updates, keep watching CNBC TV 18.